What's up, you guys? It's Kaya, and welcome back to my channel, Kaya Trades. Today we are going to go over a weekly recap and a breakdown of all the trades that I took this week. This week I made about $1,700. I lost on Monday, so we're going to go through that, but I was green the rest of the week. So let's go ahead and hop onto the charts. I'll give you guys a full breakdown of what I do on my trading day and the trades that I executed this week. So let's go. Alright guys, so I am not promoting, but the challenge prop firm that I use to do and take my trades is TopStep. They transitioned over to TopStep X recently, so I have two accounts. As you guys can see, I have a leader account here and my second follower account is right there. So everything I make on just this one screen will be doubled and copy trade on that other screen. So as you guys can see, I have all my trades for this week. We're going to go through all 5 trades. I traded every day this week because I did not have to go to work today on Friday. So first and foremost, before I start trading, I try to get a workout in, and I try to either run or get a workout in, get a nice breakfast, shower, get calmed down, and get ready on the charts. As soon as I'm done with all of those things, I go right here to Forex Factory, where I look to see about my fundamentals. Is there any news? Red folder news is what I really pay attention to. But as we can see, Monday there was yellow folder, nothing too crazy to worry about. So we're going to actually zoom in here on Monday. I technically start on the 1 hour time frame. That is usually what works for me. And let's go ahead and just make this big screen. Perfect. So I start on the 1 hour time frame and I mark out zones that could be very, very important for the way the market is moving this day. On Monday, I saw this high probability demand zone that presented itself. Market left us a beautiful gap here, as well as had a strong push up to the upside. Broke a lot of structure right here. Let's get an arrow going. It broke all of this, took all of this out, and continued to push higher, and created this nice range in between these blue lines. So for me, I mainly focus on trying to trade a 13 EMA breakout strategy. All that is utilizing the indicators 13 EMA, 50 SMA, and 200 EMA. So my 13 EMA is a blue line. As we travel throughout the week, we'll see that. My 50 SMA is this red line traveling through the middle here, and then my 200 EMA is this white line that is moving. I kind of have 3 or 4 setups that I try to use to my advantage in the markets, but my main focus is that 13 EMA breakout. As I've back tested and gone through lots of things, I've definitely seen a lot of success, and I've also seen a lot of success within the markets using that strategy. I usually do like to have my journal next to me, so we'll start with Monday, and I'll just run down quickly of what I noticed and how the market was looking and how I executed my trade. So again, I started with my workout pre-market. I had good sleep, about 7 to 8 hours of sleep. Had a great workout. I lifted heavy, and I had some good breakfast. As far as market conditions go, I saw that there was no news, and that the market was looking pretty bearish. And as we can see from here, market is going down and down and up. It had a pullback, technically pullback. Market traveled lower, pushed a little higher, couldn't break any highs, push lower, couldn't break any highs, push lower. So we were looking for a bearish move. We were looking for sells today. But it was a very strong possibility that it could turn into bulls if it would have indeed touched my demand zone down here, as well as the bottom of this range. I noted that we were bullish on the 5-minute time frame. So a part of my plan was to wait for the demand to be tapped, which another demand presented itself. If you guys can see this purple box here, that was more of, oh, we're not even on the, okay, let's go to the 5 minute. I'm crazy. Okay, we're gonna go all the way back to Monday. So after I check the 1 minute and mark out some zones to be mindful of, high probable zones, I shoot down to the 5 minute time frame, which in turn I wrote, it's looking pretty bullish, because right before 9:30, what do we see? We see price breaking structure here and kind of sort of wanting to push to the upside. Did it? Let's see. Let's see. So, about market open, this 9:30 candle, again, price didn't go pretty much anywhere. It kind of stayed in this zone, this area. And then it stayed there again for another 5 minutes. But as you can see, I have two trades on this day, both of which hit 1-to-1, but I did not take them because I was shooting for a 1-to-2 in my mind, envisioning, oh no, this is the perfect setup. But you cannot trade off of hopes and dreams. You cannot trade off hopes and dreams. So let's go ahead and get into this trade. We saw that liquidity was taken out after market open, so we could have had a strong bias on price wanting to push down. We had that liquidity grab pushing down. Again, we did catch, but yeah. So I also marked out this demand zone here. So initially I was probably waiting, let's see if I had another plan. I was also waiting for a perfect 13 EMA for the 1-to-2. Now, I took this trade to shoot for a 1-to-2. This trade right here. Market broke above the 13 EMA. The 13 EMA was crossed above the 50 SMA. Price was below and away from current price, but again, we have to be in confluence and alignment with the higher time frame. And the higher time frame indicator for the EMAs does not match or line up with the 5 minute. It is looking more bearish than it is bullish. So for me to hope and dream that it was going to a 1-to-2 was a very foolish move on my part. But again, we also journal these things so that we can learn our lesson. But all that is to say, I did in fact hit the 1-to-1, but because my 1-to-1 is right here and my 1-to-2 is way up here, I was unfortunately taking a loss on this trade. As you can see, price stopped me out here. But then I recognized and got clarity, oh, there was a liquidity grab. Market went up, wicked this area, started pushing down to the downside, and then we had a break of candle here. We also had another break of candle here and a break below market. And so I was confident in taking this trade to the downside. And it's interesting because, again, the 1-to-1 hit, but there was a demand zone resting here. So if we move this to the 1-to-2, as you can see again, we would have gotten stopped out. Oh, I think we stopped out before getting stopped out. I think I stopped out before because this is almost outside of my trading hours. I probably stopped once we had a strong close back above 13 EMA. I lost confidence in this trade. I was too emotional, and I only trade twice out of the day. So had no more trading opportunities. We were down $105 on that day. So now we're going to back out and we're going to move over to Tuesday. So in Tuesday's trade, we're going to kind of keep the same levels. We had this nice strong level here. If we zoom out, we had this wick that was never touched. We had this these highs that were never broken. We had a very strong rejection here on the 1-hour time frame. That gave me a lot of confidence to push to the buy side. However, as we can see, the 200 EMA is sitting and resting above price, which is not what is ideal for my trading plan. So let's go ahead and exit and go check if there was any news. can also see what I journaled this day. All right, as far as Tuesday goes, no fundamentals, no news, but FOMC is preparing for the next day, something to be mindful about. So again, we have all these levels. We're going to go right ahead to almost market open. So once this level got wicked through, this level doesn't even matter to us anymore. We're going to delete that level. We can delete all of these as well. So since that level got ran through, we don't even consider a level to get in anymore. But only when it's ran through. If it's tapped, so like this one was tapped, we can keep this lower level. So now we see we have this level market had not yet gotten to until later on. Let's draw out our 9:30, just so we know when market is supposed to open. I use the red vertical line for news and the green one for open, because I only trade during a certain amount of time. All right, so we have our levels from up here. So we have some levels that market could potentially go to. And again, we just came from a lower area in the ranging for the week. But as we go ahead and come up to market open, same thing as Monday. Price did not go anywhere. But I want you guys to look at my EMAs. I have my 13 EMA above price. I have my, my 13 EMA is crossed above my 50 SMA, and my 200 EMA is below price, far away from price, and below price. If we check the higher time frame, we had a strong rejection here, possible signs of pushing to the upside, as well as hitting a nice strong demand zone. Okay, so that's going to give me even more confidence in this trade to go higher. Please have patience with me, guys. I don't know why it doesn't ever go where you stopped when you go to the lower time frame, but okay, so going back, my 13 EMA, my 50 SMA, and my 200 EMA are in perfect alignment on the 5-minute time frame. But I realized from yesterday that I need to take the 1-to-1. So instead of shooting for the 1-to-2 today, I did in fact take the 1-to-1. So again, a part of my strategy is wait for market to close strong above the 13 EMA when all the EMAs are in alignment, plus other confluences like the demand zone that we touched, liquidity grabs, things of that nature, breaks of candles, all of those things. So market closed above this candle above the 13 EMA. And again, also with my strategy, I also trade after 9:30. If it's before 9:30, I do not take it. It does not count as a perfect setup in my eyes. So we've hit 9:30, perfect. Price has moved, pushed strong above the 13 EMA. The 13 EMA is crossed above the 50 SMA, 200 EMA below price. Perfect. I set my entry for the top of this candle close. My stop loss would be at the bottom of this candle, and my TP1 would be kind of off in this area. As you guys can see, we hit TP in one candle, and this was about $237. So again, on the copy trader, multiply that by 2. Beautiful day. Market continued to push through levels, tapped on a very strong level from previous days, a level that had not been tapped yet. It kind of reacted from there, had a nice strong pullback, then continued higher. Perfect. Now we are going to move to, what is it, Wednesday? Okay. So again, first and foremost, we're going to check the news. All right, so we've got some FOMC news, but again, it doesn't happen in my time frame. My time frame is New York session. but only the first 2 hours of New York session. So that 9:30 to 11-ish, so a little over 2 hours. Do my math. Y'all do my math. I try not to be in the markets too long. I try to stay in the market hour and a half, 2 hours. Y'all get it. But as you can see, FOMC was kind of later on in the day. So we're going to go ahead and go back to the charts. Just seeing off rip, we can see that market was pushing down, pushing down, pushing down, started to push up. Okay. Starting to push up, push up, push up. Is this Wednesdays? This is not Wednesdays. This is Wednesdays over here. A week. All right. So market was, let's get our arrow out. Nice friendly arrow. Market was pushing down, then it came back up, then it pushed down. It keeps on pushing down. But then we got some rejection yesterday from this zone, pushed a little higher, and then rejected from that zone again. Now we're back at our 1 hour zone that was really, really strong, had this really, really strong push here. So it's a still pretty strong level. So now we're getting some action down here at this level. And let's see what we get from there. We're also coming in contact with nice strong levels from here. So I will say, even just looking at the charts now, this very strong bearish candle is a good sign that this level is highly reactive. Just want to keep that in mind as we look at this trade. Okay, is this Wednesday? I think so, yeah. This isn't like Tradevate. Tradevate, it tells you the day too, but I guess I can figure that out in my settings. I will do that. Awesome. So let's mark out that 9:30. We already know that FOMC is later on in the day. All right, and here we go. So we see we had a nice touch from that 1 hour zone. Price is continuing to push higher. We're getting breaks of candles here, break of structure here, break of structure here. We can write those out. We have breaking structure here, breaking structure here. So all these structures are breaking, and we are getting ready to look at, we were looking for potential buys, but again, from earlier, we were talking about that big bearish candle from yesterday. Strong level. We want to see how price is going to react from above. And as we get to market open, we can see market shot up, shot up, shot up. Then what happened? We started getting some wicking and some rejection from that same level that had a very, very, very strong push down. So we're going to potentially start looking for some sells here. Again, this green candle here, price was not trying to go higher. It just kept on breaking lower, and it also tapped this zone here. So once we had a liquidity grab-ish, we had some liquidity resting up here. We wicked that area. We wicked that 1 hour zone. We want to start looking for potential sells. As we can see, the EMAs are not in alignment, so I'm going to have to either judge, am I going to go for this sell or am I going to hold off? I was pretty confident in learning levels of trading. So price likes to move in all sorts of kind of wonky directions, but it is known to react at certain levels, then move, then move, then move, then take some levels out. No more than like 2 or 3 levels at a time, maybe even just 1 level at a time. But this is a level that market took out, market reacted from, and began to push lower. We got in at we were supposed to basically get in at the break of this candle. That kind of happened. I think I clicked it a little too much. I take market orders instead of limit orders. So I probably, as soon as it tapped there, was like, okay, I'm just getting in, because thinking that was a break, but it was probably at the end of the candle. So I was already in the trade by the time this candle had started. So as you guys can see, we only experienced a little bit of drawdown. And again, in one candle, we hit our 1-to-1, because what did we learn on Monday? Take the 1-to-1. A lot of people are successful in their trading career because they're accumulating small amounts of money over periods of time. It is not a get-rich-quick scheme. You cannot just expect to hit a home run every time and expect to win and then win too. So we learned on Monday to take our 1-to-1. We did. Could we have gone further? Yes, but we were okay with our profits on this day, and we were up about $302 on Wednesday. Beautiful trade though, went right back down. Still didn't quite touch the bottom of the range, but did tap into this other zone that we marked out. So now we're going to head towards Thursday. We have 2 more days left to assess in this trading week. All right, and then remember this really, really, really key level that we made here. There's the strategy called the turtle soup as well, where market makes a lot of strong, significant lows, sweeps those lows, and reclaims price kind of in the higher area of where the lows were, and then shoots up really, really high. That's kind of what happened, but we're not going to talk about that because that's not really a part of my trading strategy. I'm just now seeing that as I am going over these trades. But a turtle soup strategy, that one, I know in Adam Mancini, that's his like main trading style. Okay, so moving on, we are at the 1 hour. We are experiencing a break through this level. So we're going to pretend like this level doesn't even exist anymore. It's a nice strong level that's holding. As we can see, I've marked out some of these levels down here because I'm thinking, okay, price is going to go down. When market opened, that candle was really, 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 really strong. So in that moment when it was creating, I also marked out this demand just as a possibility for an entry point. Let's go ahead and delete this. I'm going to make this purple. Alrighty. But as you can see again, market smashed right through it, so we're actually going to take that off. It doesn't really count to us. We're not really looking for it. So if we're looking, what can we tell price is doing? Price is pushing where? Downwards, 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 downwards. Does that mean we take sells? Maybe. Does that mean we take buys? Maybe. Let's go ahead and dive a little deeper. But first, again, checking for our news. As we can see, FOMC happened, and we have PMI. Now, I don't know what PMI stands for, so if you know, drop it in the comments. PMI, I could look it up, but it's like, I just know that if it's red filter news, I'm going to be paying attention. So we have PMI today. I said PMI, here we go. We have PMI, and that's kind of around the time that I trade. This is my time zone, so I need to figure out how to do this in the time zone of New York, but for the most part, it aligns with my actual time. So now that we noticed price was going down, we've noticed that we do have news coming up. Let's go ahead and get into this trade. Alrighty. So as we're getting into this trade, we are noticing price is moving lower. Price is moving lower, breaking structure here, breaking structure lower, breaking structure lower, breaking structure lower, breaking structure lower. Perfect. So one of my strategies I do use is the break and retest strategy. As we can see, there was liquidity right here. Market broke right through it. But again, look at my EMAs. My EMAs are also, they're not perfect, but they're in better alignment. So my 13 EMA has crossed below my 50 SMA, and my 50 SMA is above my 13, so I just said that. But my 200 EMA is above and away from price. So when I was taking this trade, I think I went for the 1 to 2. Perfect. Yes, I went for the 1 to 2 because of the confluence of this breaking of structure and the retesting of this structure. So market, before this candle here created, market kind of broke that structure, even though it was just barely. It just barely had a really strong wick and it barely broke it. But my EMAs, nice close below the 13 EMA. Other EMAs are in alignment. We're in confluence with the higher time frame, going bearish at before all these candles here. We're going bearish. So these are all these confluences, all these reasons for me to have confidence in taking sales are happening. Plus, as we can see this yellow box here, we have a demand set up, and it's a beautiful trade. We just had a beautiful trade. It was a nice little tap. We didn't get in at the break of the candle because this was the 9:30 candle. So if the candle is not at 9:30, I'm not trading it. I'm not trading it. So this is at the end of the 9:30 candle, which counts for me. So 9:30 had hit. We had a strong break. So I put my entry at the close of the candle that broke down and through the 13 EMA with the other EMAs in alignment. I put my stop loss at the top of the wick here, and I went for the 1 to 2 simply because of the confluence, the supply confluence, the higher time frame confluence, the EMAs confluence. Beautiful trade. And then we were almost at the 1 to 1. I think we did break the 1 to 1. Okay, so we broke the 1 to 1. I think if you watch my last YouTube video, I showed this trade play out live. So you can go and watch that as well. And then we had the news, and boom, market shot down to my TP2. It went even further, but again, I don't really shoot for 1 to 3s. I haven't really practiced that, back tested that, done any studying on that. So I'm just sticking to being content with my profits, 1 to 1s, 1 to 2s. And we were able to hit on Thursday, and we made about $497. Again, on the CopyTrader, multiply that by 2. All right, but as we can see, we're by this level of the range that I marked out earlier this week. We had a range, which came from really just this low over here. Price bounced here, pushed really high up. So that's what we're looking at. So now to today on Friday. I guess it came from this week here. Strong level that market pushed way down from. Let's make this, zoom this in a little bit so more you can see. So this range comes from right here. Market bounced here, pushed really high. Market bounced, broke this, came back, bounced really low. Very strong support, very strong resistance level right here. But then market broke through it. So now what does it become? A support level that we are in. Market came here after it pushed all the way up to this high of this area. Market had a strong push back down. This is a very strong resistance area, pushing to a very strong support area. So I'm assuming again it's going to push back up at some point in time, hopefully before pushing lower. And that's what it did. And we're here on Friday. And oh my gosh, yes, Friday. You know, my boy was speaking. My boy Powell. Was speaking. So he spoke today around 10 o'clock market open, and he actually got us a nice solid close, solid trade today. So let's go ahead and delete some of these things. It's just to kind of get a clearer picture. Okay, I think that's it. Okay. Perfect. So, as we can see on the 1 hour, we already tapped this zone here. We are going to potentially push a lot higher because we again tapped that bottom of the range and wicked it. Okay, we're rejecting the bottom of this range. In the last couple times we've touched this range, price has been shooting higher. So we are looking for potential buys. Now, the difficult part of this trade for today was the push of market open. So before market open, as we can see, EMA's perfect alignment. Blue EMA is crossed above, 13 EMA is crossed above the 50 SMA, and the 200 EMA is below. Okay, but then our 200 EMA crossed above. So it's not a perfect EMA situation, but it's still a good EMA situation. We created this demand zone once we broke this high right here, but did price come back down to that area after open? Absolutely not. 9:15, it's still going. 9:20, it's still going. 9:25, it's still going. 9:30, it's going. It's going, it's going, it's going. But what do we see this little line right here? I'm going to try to make it brighter so we can see it. We see this 45,103 level. What is that level? We've marked out some liquidity. Okay? We have liquidity resting here, here, and here. So as we go back to our area on the 5-minute time frame, we see that market has broken this level, kind of stayed at it, then bounced higher and broke this level. So this is the level that we were looking for to break. This level broke. Then it retested both of these areas that wicked and began to push higher. So I'm looking for another break and retest situation. Market broke these two levels, came back, retested them, had a strong push to the upside, and this candle got broken. So I like to use the break of candle after the break and retest. After the break and retest, I don't want to get in on this wick, because what if this wick and this wick, what if this wick caused this candle to be red and bearish and push down, even though, oh, it's just right here. As soon as it comes down here, I'm waiting for this candle to close so that I know what I want to do and move next. And it had a nice close to the upside. But then I'm waiting for this candle to decide, okay, is it going to break this candle's high or continue to push lower? What did it do? It broke that candle. That's when we got in today. And as you can see, we were waiting. Obviously, most of the week we're going for the 1-to-1, but notice this blue line. Where was our range from earlier this week? In between what blue lines? These two blue lines. So, I've seen it before in the charts. I've seen it before. I've experienced before. When market is in a range, it takes out the bottom of the range, it'll go to the top of the range. It takes out the top of the range, it'll go to the bottom of the range. Again, it's not picture perfect every time, but I was really confident that this trade was going to touch the top of this range. And so we waited. We were risking about, I think it was about $300, $400 on this trade. It was really $800 trade, but as you guys can see, I have two daggum orders right here. I was watching the trade. I was like, okay, let's go. And I looked at the sell and I pressed sell. So then I bought because I only limit myself to one contract on YM because it's obviously more than MYM. So I wasted a .com trade, lost about $20. No problem, nothing crazy. So then I immediately pressed buy, and we got in. Same basic entry point. Market went up, almost hit my 1-to-1. But I was like, no, I know this is gonna hit 1-to-2. It's right there. Hit my 1-to-1. Most importantly, I was willing to lose. Once you go into trade, you basically have to accept the fact that you basically already lost that $400. As soon as I place the trade, that $400 is no longer mine. If I win, great. But going into the trade, I need to learn to accept my risk. And so what did I do this trade? I was like, all right, I'm going to put my stop loss here at the bottom of where a broken retest. If it stops me out $400, well, dang, we'll just take some time to make that money back. I was willing to risk that $400 for the $800 gain. And right before Powell started speaking here at the 10 o'clock, the market went right back down to my entry point. And it was like ticks away from my TP1. But I trusted it. I had full confidence in this trade. Break and retests are very high probable, in my opinion. From what I've seen, what I've done, what I've experienced, very high probable. And then Powell opened his mouth and started speaking. And boy, oh, y'all should have seen this candle when it was printing. Oh my gosh. Started off nice and slow. Then boom, 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 boom. We was waiting for it to pull down and it didn't, and then it did. And then it said boom, 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 boom. I have this trade marked out because this is the trade my boyfriend took. So we both made bank on today. His trade hit the 1-to-1 funny story about that, but we're not gonna get into it. If y'all want a story time on that, let me know. Our trading sessions are hilarious. And it was still pushing up. Market was still pushing up, even to more liquidity, even higher. So we could have shot for these, but we're going to be content with what we have in the markets. Again, liquidity resting here that I could have waited for. Liquidity resting here. Market shot to level, level to level. Rejected, hit a level, reacted, hit a level, reacted, hit a level, reacted. So I can delete this because I didn't take that trade. And then today we made about $784 just off of this one trade. Multiply that again by 2. Copy trader. You guys do the math. And that was a successful trading week. We hit pretty much every day of the week, but again, we did not take the 1-to-1. But that was just a lesson that I had to learn. And I should have known it already because I do get 1-to-1s very consistently. But unfortunately, some of us have to learn lessons over and over again. So, I will not be trading. I will be trading next Friday because I don't work. But I usually do not trade on Fridays because I work a 9 to 5 just so I can start, funding my accounts, and things like that. Just putting money back into my businesses, back into my funding account, just extra stuff on the side. So yeah, thank you guys for tuning in. If you learned anything today or if you would like to learn anything more, go ahead and join my Discord. The link is in the bio where I help you and I also work on myself on getting to the next level of my trading. It's Kaya Trades, and until next time.